Hi, thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We like to get into explaining what's going on with mortgage rates on a daily basis, whether it might be something from the economic calendar or headline news or geopolitical. Sometimes the sentiment in the markets change, and if you're on the sidelines, you may not understand why good news is now bad news or vice versa and what's going on. Well, we try to get those explanations out there for you. A little bit about myself is I'm a loan officer. I do work with a national lender, so we do loans in all 50 states. So if we could be of any service for you on any purchase or refinance needs, we'd love to be able to help you guys out. We can certainly get your pre-approvals out there so that we can make your offers as well as help you with running numbers for your refinance. We're here to help you guys out. But not only that, we're here answering questions you guys might have and be a resource for you. So it could be something from mortgage programs available out there, or it could be questions about mortgage rates or what have you. So we're here as a resource as well. Uh, look, so without further ado, we'll just jump right into it. We'll start with the economic calendar. This week's been pretty light, but the big one this week was yesterday with that CPI report, which came in quite hot, and the markets reacted quite negatively to it, even though they expected kind of a hot number here. Today, however, we do get a consumer sentiment. This is a survey brought to you by the University of Michigan, and we actually got the lowest number since 2011. So it dropped from 67.2 back in last month of January. Forecast was actually supposed to be slightly higher at 67.5. However, it dropped all the way down to 61.7. And again, this is a number we haven't seen since 2011. So about basically a decade here. So if you recall, back in 2011, we're just kind of getting out of a the Great Depression or Great Recession type of thing. So those that was basically or kind of almost in the middle of it because it lasted kind of a long time there. But however, there are some concerns that potentially we could be going into a recession sooner than later type of thing. Now, not much else going on out there. There are few Fed speakers. We had some hawkish comments made by Bullard yesterday, and then we had a few others came in not as a little lighter than what his came out, and his comments did have a pretty dramatic uh, effect on the markets here. We end up closing down on mortgage-backed securities, ended up closing down 83 basis points. That was nearly 1 point in change, meaning that if you had a on Wednesday, if you had a no point loan, that would now cost you almost a point right there. That's how much of a change that would have made on there, and that could dramatically affect the rates almost by 3/8% in the rate. Now today we were actually up when I over about an hour and a half ago when I first turned this on and was kind of looking around. We were up like 35 basis points, so things are looking kind of a little bit better. However, over the last half hour or so, we end up dropping the other direction. Now we're down 6 basis points. A lot of lenders are already in the pricing changes for the worse. So the repricing and coming out with worse pricing than what we had yesterday. So this is what we're kind of saying. We had a big shift in those pricing, and unfortunately, right now we're seeing again our pricing erode some more here. Here's yields. We did break above the 2% barrier yesterday. Well, I mean, it broke. Or, no, yeah, we broke above it yesterday for the first time. We hit there much quicker than we had anticipated, and it's been kind of we'll see how much of a ride we get going forward here. Now, we're at just under 2.05% on the 10-year Treasury, and right now a lot of the market's going through a lot of volatility right now. There's just a lot of uncertainty as to the Fed's next action. They do know that there'll be a rate hike, but what they're concerned about now is it going to be a half a point or is it going to be a quarter a point? You know, we get people like Bullard who came out, he's in favor of a half a percent, and then you get other people like, well, I'm not really sure. So that uncertainty in the markets is creating a lot of volatility. You're seeing the mortgage-backed securities going up and down in dramatic fashion. You're seeing the stock markets going up and down in dramatic fashion. So right now, that's kind of at the forefront. We're looking at the inflation data, and then of course we're trying to figure out what the Fed's next action will be. Are they going to be inflation seems to have gotten worse, and the Fed's talking about again doing some rate hikes. And the one thing to keep in mind when they do rate hikes, we don't get immediate results from a rate hike. It takes a good 6 months for it to get absorbed into the economy before we even feel it. So any rate hike now won't be felt until this coming fall, and so it might be better served to go ahead and go with a higher rate hike to get more dramatic effect of it. So, uh, so we'll have to kind of wait and see what they will do. But in the meantime, we got a lot of choppy waters ahead of us coming forward here. So stay tuned. Not much else on the horizon here. Again, this week was pretty light for the most part. We'll look at right now the national average for conforming loan limits. 30 now topped at 4.02%, so we just dropped to 4%, and the 15 years now at 3.29. These do have points built into them, and if you've watched some of my previous videos a while back, I've talked about what variables go into pricing and loans. So there's a lot of variables that go into it. So that's why there's no one size fits all, and these do have points kind of built into them. We typically go in 1/8 increments in terms of pricing and of sorts. So in any case, hope if you guys want a rate quote, give a shot. We're here. We can help you guys out. We can get you guys a rate quote. Meanwhile, if you guys like these videos, please help us out. We greatly appreciate it. If you guys could smash that like button and share us, we greatly appreciate sharing what we're about. And we greatly appreciate you guys. Thank you so much for your time. We'll look forward to see you guys on Monday. Have a great day. Bye bye.